Good morning and welcome to the XM.com weekly market update. Joining me again is Peter McGuire, the CEO of X1. Good morning, Pete.
Good morning, Andrew.
All right, domestically, not a huge amount of activity. We have the inflation numbers coming out this week, which are still going to look to be sticky.
Sure.
But the Aussie dollar, ironically, is on a bit of a slide, which is a bit odd considering the inflation numbers are going to be strong.
Absolutely. Well, a couple of things on that. First off, if you're looking at the yen versus the dollar, and that's US dollar versus our dollar, but the yen, we've seen a move, the best part of 6.5% since the start of the month. And there you are. I mean, as the Aussies come off and so as the yen appreciated, so is the US dollar appreciated. So it's been a great market to short since really probably about the 10th of the month, 12th of the month.
Yeah, it's quite a drop there. So speaking of the yen and Japan, plenty of activity in Japan this week. The CPI numbers came out pretty much on par with what the market
forecast
was expecting. So nothing unusual. And as you can see from the chart there, it's pretty constant.
Yes, it is. There's no doubting that. And it'll be interesting to see as far as policy and what they're prepared to do. Bank of Japan will get the read, I think, sometime Wednesday, because it's a couple of hours before Fed Chair Powell delivers the US. So you're looking at the best possibility of a 10 basis point rise, and it'll be the last one for the year because this is the last meeting. And then the next part of it is, will they see a reduction as far as bond purchases? They currently purchase 6 trillion a month. Sounds a lot, doesn't it? See how many yen are you buying? Only 6 trillion.
It's a lot.
And they could knock it back to 5 trillion. So that's the consensus at the moment.
Yeah. And as you said, the yen, plenty of volatility there, which is great for the traders.
Yep, it's 4.5% moves since the start of the month. So July's been on fire for yen traders, and everyone's riding it with glee.
And the Nikkei still performing, like year to date, up close to 16%, which is a great return. But it's come off a bit, which is not unusual considering there's been a bit of volatility in those equity markets in the last sort of few weeks.
Yeah, absolutely. Yeah, so I think we've just got to be mindful of that, and as it leads through the tail end of tail end of July, how August and September look, the rest of summer in Japan, are we going to see a continuation of a little bit of a rally to the upside? Jury's out, strap yourself in.
Plenty of activity in Europe, not only the Olympics, but on the economic front as well. So GDP, there's a lot of data coming out of France, Italy and Germany this week. The numbers still aren't looking great from a growth perspective, but that's not unusual. But is that enough for the ECB to look to drop rates further?
I think so. Well, there's no doubt it'll happen. Lagarde has pretty much penciled that one in. It's just a timeline when it's going to deliver. And are we going to see that in possible trio with the States do something in September and the Bank of England and quite simply Eurozone to follow suit? We haven't got long to run.
No,
September's nearly here, and it's damn cold in Sydney at the moment.
It certainly is. Over to the US, GDP numbers came out a strong figure. They were expecting 2%, came in at 2.8.
Yeah,
which
strong.
I know we've said it so many times, the resilience of the
US
economy and the US consumer, it just keeps on giving. And on the back of earnings, I know we're only early into the earnings season, but generally the numbers have been pretty solid again.
Yeah, exactly. You can't, it's very hard. You would have to think, and I'm going to throw something out here, inflation, with the consideration of where it is over the last couple of years, it makes it a lot easier to get your GDP up when everything costs so much more. That is one component. You can't deny that. But yes, I've got to agree with you. Quarter on quarter, it's damn fine numbers. Very, very strong.
And I think whether or not the Fed eases in September or not, like they're basically saying they will, but who knows?
Yeah, who knows?
No one really knows. But I think, and a lot of that's baked in as well, but there's just been a little bit of talk recently. Do they preempt that inflation number a little bit, like not wait for it? If they wait for it to get to close to 2%, then...
Well, they might be here this time next year.
Yeah, well, it could go lower. So
yes.
And there's that talk that they need to get ahead of the curve a little bit on that, which... Well, like central banks aren't typically good at that.
No, they're not. And there's everything that I read, they're saying they want 3 cuts by December, and the latest will be January. So when you think about that, that's only 5 months to run. When we look, we're at the end of July, so I got August in the next day or two. Tell you what, it's going to be action-packed for currency traders.
Yeah, you'd be very surprised if you got 3 cuts by the end of the year.
So I would be as well, but considering you've got an election, so election interference.
You would think probably one only.
Yeah, if they even do that. So everyone's got an opinion. That's the beauty of the markets.
Yeah. So unless this inflation falls quickly from where it is, who knows? But it would be a surprise. But tell you what, if they drop 3 times, you probably want to be invested in the equity market with cheaper capital.
Yep.
That will take off. But time will tell.
Time will tell.
We'll keep an eye on all those numbers. Keep an eye on the American election. Keep an eye on earnings. So there's
plenty to keep an eye on. And geopolitics. I mean, when you're thinking about what's going on and the issues in Ukraine and certainly Hezbollah and Israel, they're, the war rumblings are very, very consistent and they're starting to gain volume.
They certainly are, which hopefully that backs off, but we'll keep an eye on that as well.
Seems to be going the other way completely.
It
hasn't hit energy markets yet. There's been no disruption from an energy flow because they've really tanked. WTI is back at that 75, Brent's under $80 a barrel, gold sitting at 24.25. It's shopping around. It doesn't know whether it wants to be at 2,500 or 2,400. But plenty of movement.
Yeah, it's unusual this time, like particularly the energy and the oil market. In these uncertain times in the past, the oil prices probably would have gone up significantly.
Exactly. I'll leave this one with you, and this is something to look back at the end of next month. Congress goes on holidays all through August, and that's when things normally do ratchet up. So let's just see if this August is going to be a hot one.
Same again.
What is it? Neil Diamond. Hot August night.
Could be. Time will tell. All right, Pete, thanks again.
Thank you, Andrew.
All right. And that's the XM.com weekly market update.